Traders, and welcome to the Technical Analysis Market Wrap on Friday the 18th of March. So although it's not going to appear in your economic calendars, or probably most of them, it is quadruple witching hour this week, which means there's three kinds of options that are closing, and there is a record amount of options closing actually this Friday, which is today Australia and obviously tonight in New York. So we have to be very, very mindful that the markets have set themselves up for these closes because it can definitely react in that way. So we're going to start out with our Aussie USD today and see where that one's tracking. We can see that it's sitting right on the resistance line that we drew up last week. It's around that 73.80 area. Now look, we know this is a very strong level, even though it doesn't look it from this level here, because you can see a bit of congestion there. If you go out to a weekly chart, that's where you're really going to see the bigger picture. You can see here that it was very strong resistance back in July 2020, and it was also even in January of 2019 and the latter part of 2018. Very, very, very strong level. Now, look, for all intents and purposes, it looks like it wants to break up above this level. It's trading above the two moving averages on a weekly, as you can see there. Even when you go to the daily, it's looking quite strong. We've already had the cross, and it's certainly trying to attempt to break this line. But we do have to be mindful that it did fail at this attempt here. So we've got to be very, very mindful of that. If and when it does eventually break through, I would still prefer to wait for the retest from above, because when you get that, you're going to get that momentum shift, and you know for sure that you've got the series of higher highs and higher lows in your favor. So that's a big deal. And because it's such an important break, I would prefer to wait for that. Failing that, if you see a change of trend on a smaller time frame, say if we go down to the 1 hour or something like that, and we see a series of lower highs and lower lows, then we can start tracking it back down to the lower 72s again. So definitely a possibility either way, but you just have to be very, very mindful that this level is very, very strong, and it wouldn't surprise me to see it sit around here for the next 12 to 24 hours really, until all of the 4 p.m. New York time really is when quadruple witching hour happens, and it's going to be right up to the bell this time, unfortunately. So we may not see a lot of big movement on a lot of these key pairs, because we are probably waiting for that sort of information to come out. But again, up a break, a daily close above the 73.80 level, wait for it to retest from above, then we're going to be looking up to the 74.75s again, which is very realistic. Failing that, a change of trend, and we're looking down to around that, the 72. This is obviously a daily chart. We're looking at around that 72, 70 to 60 area. Okay, so about 100 pips. And if we get that, then we're probably looking at this roll reversal zone here around that 72.60, 72.50. So good trading on both sides, but I think you just have to wait for the confirmation. All right, we'll move over to the US dollar CAD. This one's finding itself at a place of pretty solid support now, 126.30. You can see here that even on the daily chart, we can see this has been a pretty strong zone for it. Plenty of touches and plenty of rejections of it. It's probably going to be one of those ones where it's going to be tracking around this level here in 12 to 24 hours really. Again, just waiting for that news. It's one of those ones where, again, you have to go a fair while out to actually see that it is an important zone. So, like I said earlier, we are sitting at very, very important zones. What I am worried about for this one, though, is it has had, even on the weekly chart here, 4 or 5 very, very strong weeks in a row where it's rejected off these highs, and it's finding itself on the very, very bottom now. So to me, even on the bigger picture sort of stuff, you can see here that these highs here have actually failed to even get to these previous ones. And I know it's not a lot in it, it's around that 130 level, but it is still enough to sort of give us those worrying signs. Now, we still obviously have geopolitical tensions going around that are actually affecting all of these, especially the oil-based currencies. So it's something to keep in mind. But we do know that the 126 is a very, very strong level. So probably any trading on this is going to be centered around very short scalps around this level. A bit of a rebound on a smaller time frame around this level here. Could see it push up into the highs at around that 126 sort of 80 area, which is around this level here. Okay, and failing that, some shorts down to the 126, but very, very short scalping on this one until it proves a direction that it's really wanting to go in. So we're more than likely not going to see that until early next week. All right, we'll move over to the US dollar yen now. This one has been the star of the show. It's finally broken through and pushed up into the 118s and very close to the 119 like it did promise us. It did actually get to 119. We've been calling this for a long, long time, pretty much the majority of the year that we felt it was going to get there. It finally did. On a weekly, you can really see the story. You've got to go out actually a long way to really appreciate this level. You can see here that this is the last time it got to the 119 was way back in 2016, 2017. So that's how long it's been since we've actually got that chart still booting up, because we never load up a monthly. So you can see here that we've actually had a very strong level now. Look, realistically, you know, it has promised to do so, but now it has hit that zone. Okay, so we didn't think it was going to go past the 119 in a big hurry, in a towering hurry especially, and now it's really exploded out of that congestion. We've basically hit that resistance very quickly, and we're probably looking for reversal opportunities from this point onwards. So it's one of those ones where, you know, realistically, could it go longer? Yes, it could, but is it likely to do it in the first instance? Probably not. So you need to be going to the smaller. I mean, in these sorts of situations, I like to draw the resistance line around the 119. We know it's very clearly where it is. Look for the opportunities off the smaller time frame. So we see a series of lower highs and lower lows, which we're getting on the 1 hour now. That's a very small scalp. I wouldn't be getting overexcited about that until it broke the 50 moving average, of course, because it's got two very important moving averages still underneath it. But if you get that on, say, a 4 hour and you start to see a break of the 20 moving average, that's what probably I would take. I would be looking for a pullback down to a reasonable level, you know, maybe down to the 118 or the 117.50 again. Probably that 117.50 is a pretty good level, but the 118 is first and foremost the point where it's probably going to reverse to. So probably scalping again. I don't even expect that this is going to sell off all the way down to the moving average, because it's accelerated so far away that we're probably going to find some consolidation up around this level now and wait for the 20 moving average to catch up. And that would probably be the ideal situation. So reasonable scalping in between those zones. I wouldn't be trading outside the 20 moving average and the 118 or 19 level for now, though. I'd be looking for the scalps inside that, probably down to around that 117.50 at the lowest until the 20 moving average actually catches up, and then we'll reassess at that point when the market gives us a little bit more guidance. Failing that, though, a break above the 119 and a retest would be the only thing that would convince me to go longer. The longer's already done on this one now for mine. It's already done all we needed it to do. But if it breaks above 119 and then comes back and retests it and finds some consolidation up there, then we could start looking again to go higher and break higher again. All right, we'll move over to the dollar index now. This one is another interesting one. You can see I don't really like that it's failed on this high here to actually make a new one. You can see we had a really good move up to the 119. Oh, 99, sorry. Then it came back down. You know, it failed to get up to the previous highs again, only just, but it still failed, and it's found itself at these lows again. It's hit the 20 moving average. Extraordinarily important zone for it now. Again, when these big key expectation announcements are coming out, you always find that the very key, you know, indices and currency pairs are going to gravitate to those really important zones, and this is no exception. Sitting on the 20 moving average right there, as you can see, on at 97.84, very important zone. Of course, that reflects on the EURUSD. Same deal here. Okay, we're still in a, you know, dead set downtrend, no question about that, but it is trying very hard to break up, and if it does break up from here, that has been reversed, and that's why it's probably a very key zone for it. You can see that it tested that roll reversal zone. Just like magic, the key levels hold up. You can see it touched it and reversed off it, came back down to below the 20 moving average. It's probably going to hover around here. I wouldn't expect really big movements in this particular pair either until we actually have the Friday out of the way. Friday New York close, a very important close this week. So we're not going to see a lot of action until Monday, but Monday could certainly be the catalyst for some of these big trends to kick on if we do get a close above this level. This is the level that we want broken. So the 111.40 level is the key level for mine. If we get that, a break above there, then we're going for this particular level here, which is that 113 that I'm talking about. But it has to break this level first. Okay, the 111.30 level is a very important zone for it. This is the next target on the way up. I'll draw that in for us. Whoops. Get horizontal. This is my next target, the 113.30 area. Okay, so what we need to do obviously is to break past all of these moving averages in order for that to happen. But if we get past this roll reversal zone, the important thing that's happened here is we've got the higher low sequence. So we've got basically a trend that has broken up. It's changed the downtrend to an uptrend on a daily chart, which is a no nonsense chart. and then we've got a very clear target of 113.20 to 30. So that is our target. So I wouldn't be taking that now, of course, until we get Monday out of the way and we get a close above this level here. If we get a daily close above, then we know that we're starting to track up there. We want to get past the 50 moving average, of course, but the 20 moving average close above is a very, very important close. So that would probably be enough for me to start to get very keen on this higher level. But of course, a failure at this point here, and if it holds below the 20 moving average and we fail to make that higher low sequence, then we're still in a downtrend. And of course, we start targeting the lower areas of around that 109 again. So very important for the euro. This is a crucial zone, no question about that. We're trapped at the moment, but when we break out either side, I think we've got a good portion of about 150 pips either way of pretty easy sailing. So, very good trading on the euro. We just have to wait for the Monday to give us the direction. All right, the last one we'll have a look at is the S&P 500. So the all-important S&P 500 has a pretty good week this week. You can see here that we've bounced off the 200, which is a very important moving average on a daily. As we know, we've had 3 touches now. We've had 3 very, very big days of movement. But when we did get this low here, we were able to draw a validated trend line down on this. So we can see here, we've got the trend line. It's validated at this point here. So we do respect the touch of this level. I don't really expect that we're going to see a lot of big movement on this one until the day session is out, unless, of course, something happens that is unknown, and that could be anything, especially with a geopolitical climate that we've got at the moment. Anything could be a catalyst for a big move up or down. But in a normal market, we would expect that we would hold at around this level here and consolidate for the next 24 hours. We can see that the 50 moving average is right on that as well. So we've got a 50 moving average and a trend line. So we've got resistance in 2 areas there. So just be very, very mindful of that. We also have resistance from this point here. It is a bit of a role reversal zone, make no mistake. It's a very important zone, this 4,400 level. So, we're probably going to be hovering fairly close to it. A bit of a reversal, we'll see a scalp down to around the I'll draw it on the chart for you, potentially down to the 43, it's a 43.50 area that I'm actually targeting here. That's around 50 points down from this point onwards. So if you're going to scalp intraday and we get a series of lower highs and lower lows, maybe that's a scalp. But I'd be very cautious about taking anything longer than this level, knowing that we've got a very, very important close, and that close is going to be impacting the S&P 500 more than any other. Okay, so just be very, very mindful of that. And I think Monday is going to be a very, very interesting day, because I think we're going to have a very important close on the Friday, and we're positioned to either move considerably higher or considerably lower on most of the key indices and currency pairs on Monday. So we know our breaks, wait for the close and see what the markets give us after the 4 p.m. at New York, when the quadruple witching hour closes what's going to be a record option position, and basically it's going to be the catalyst for what we see on Monday. All right, thanks everyone. Hope you had a great week's trading and have a great weekend. I look forward to seeing you all next week.